Almost 200 nations are meeting in South Africa in an attempt to keep the Kyoto Protocol alive. Scientists say greenhouse gas emissions need to peak and start falling by 2020 to avoid devastating effects on our environment. But countries and companies can choose to offset their emissions by investing in voluntary emissions reduction credits. Steve Graham is a senior consultant at Advanced Global Trading, a company that trades in these VERs. Steve, thank you so much for coming in.
Pleasure.
What is the difference between what they're discussing in Durban and these VERs?
I think it's important to realise that what is being discussed in Durban isn't whether they should actually reduce emissions or not. What they're actually trying to debate and discuss and agree upon is by how much these emissions should be reduced.
Okay.
And whether this agreement is going to be imposed at an internationally agreed sort of protocol level, or whether it's going to be imposed either regionally or locally.
Okay.
For example, the initial phase of the Kyoto Protocol was to try and reduce emissions by about 5% from 1990 levels. As we stand at the moment, we have countries like South Africa, for example, that have committed to reduce emissions by 34%. We have Denmark that have committed to 40%, and even here locally we have Dubai that are trying to reduce in the region of 5 million tonnes on an ongoing basis annually.
Okay, so it's about cutting emissions, but so what are the VERs?
That's a good question. Okay, VARs are essentially driven by a mixture of private sector investors, so private individuals like yourself and myself, and companies, large corporates, for example, that have a commitment via their corporate and social responsibility departments to reduce their emissions. And examples of those sorts of companies are Google, for example, HSBC, and Rabobank, for example.
So it's trading in a commodity, basically,
Indeed,
right?
so, yeah.
Okay, so if they do reach an agreement to replace the Kyoto Protocol, how is that going to affect your market?
The short answer is that it probably won't. Why is that, I sort of hear you ask? Well, to give you an indication, our private investors this year alone have already seen a return on their investment of 26.4%. And with a commodity, that's with a commodity in carbon credits that's tipped by Barclays Capital to be the world's fastest and the largest growing commodity in the world. The market at the moment just keeps on growing. If you go back to the market inception in 2005, it was valued at $15 million. Last year, for example, in 2010, it was $144 billion, and it's predicted to be in the region of $1 trillion by 2020. So you can see the size of the market is continuing to grow. Okay,
well, we're going to look forward to hear what comes out of South Africa with that the agreement, and hope they do come to an agreement.
Absolutely.
Steve Graham, thank you so much for coming in.
Thank you.